Think you need 20% down to buy a home? Wrong. What if I told you that you could get into a house with as little as $1,000 out of pocket and sometimes even zero? Yeah, I know it sounds crazy, but today we're gonna break out how it actually works, who qualifies, and how you could possibly get into a home a lot sooner than you were thinking. Let's do it. Most people still think that they need 20% down to buy a home, when in reality, a lot of first-time home buyers and experienced home buyers are putting down way less. Let me show you some options that may work better for you. Option 1, an FHA loan. This is a Federal Housing Administration insured loan that only requires a 3.5% down payment. So that means if you're buying a $300,000 house, that's only $10,500 compared to the 20%, which would be upwards of $60,000. And that doesn't even include the closing costs that are associated with the program. Option 2 and 3 are both government programs called USDA and VA. Both of these programs are 100% financing. That's right, 0% down payment to allow you to get into that house with very little out of pocket. Now, these programs do have large caveats. A VA mortgage does require you to be active or previous military in order to utilize your military benefits for the program. And the USDA is a rural housing program. What that means is if you're buying a property, it has to be located in a rural area in order to utilize the 0% down that USDA offers. Number 4 is going to be conventional financing. This is going to be your standard mortgage program that you hear a lot about. And if you're a first-time home buyer, 3% down is the minimum. And if you're a returning home buyer, 5% is going to be the minimum down payment on this program. Option 5, and an option that not a lot of people know about or understand, is down payment assistance. All the programs I just mentioned between FHA, conventional, USDA, and VA all qualify for state down payment assistance. And this can be utilized whether you're a first-time home buyer or a returning home buyer. And what is down payment assistance? Many states that you're purchasing your house in will offer grants or help with financing the down payment percentage that the program typically requires when you're going to buy a house. What this looks like is if you're getting an FHA loan for $300,000, your minimum down payment percentage is 3.5%. That's $10,500. Well, utilizing down payment assistance, you can either finance that down payment or you can receive a grant to cover that and sometimes an additional percentage to help cover your closing costs on the back end. I was just able to help a homebuyer here in Arizona utilize the down payment assistance program here in the state to finance their down payment in actually a forgivable grant. How this worked was that we did an FHA loan, 3.5%, and it required that down payment. But we also had closing costs to worry about. One, the down payment assistance covered the down payment percentage that it was required on FHA, and it was financed into a 5-year silent second lien. What that means is they are not making payments on this, and after 5 years of living in the home, that entire grant is forgiven. Now, if they sell or refinance within that 5 years, they do have to pay a prorated amount back. Now let's talk about the closing costs. All the programs that we've talked about today will have closing costs associated to that particular program, and they can vary anywhere from 2 all the way up to 4%, depending on the lender that you're working with. So make sure to get additional quotes so you can see what they're charging in closing costs. Now, how can you pay these closing costs if you only have, let's say, $1,000? Well, in this particular case of my home buyer, what we did is we asked the sellers to pay the closing costs. Their house had been sitting on the market for quite some time. They were motivated sellers. They were ready to get out. They had moved out of state. And so we asked them to pay 6% seller concessions. What this means is it paid all of the closing costs associated to the down payment assistance program, plus it paid for the buyer's interest rate to be bought down to a lower rate. So they were saving money by not having to come in with the closing costs and save money on the interest rate because the interest rate was lower, saving them money on their actual mortgage payment. In the end, my home buyer actually walked away with purchasing this home with $0 out of pocket. They put $1,000 deposit on the home to get it under contract, and they ended up getting that back after closing. So here's the deal. 20% down is no longer required in this market. And if you're waiting until you have that full 20%, it could cost you big time. Home prices are on the rise. We're seeing an average home price value or value of the home increase up to 4% year over year. How long is it going to take you to save up that 20% versus purchasing a home today and start building equity in something for your future? If you're wanting to see what you qualify for, drop a comment below or shoot me a DM so we can figure this out together. If you found this video helpful, please like and subscribe. Thanks again for watching. I'll catch you on the next one.